Hey everyone, I'm Nick Lequier, Principal Broker at Mortgage Wellness. I'm joined once again by Peggy Hill, CEO at the Peggy Hill Group and #1 RE/MAX broker in Canada. So Peggy, today's the day. Another big Bank of Canada announcement, of course. The result?
Nothing sandwich?
Nothing. Like nothing. And this one was widely anticipated that there'd be no change at all to the
It was wildly anticipated the last few weeks. It wasn't wildly anticipated a month ago when I said it.
Yeah, that's a good point. Now, I was always in the April camp.
Right.
Going back to say November or December, I was always in the April camp. I always thought April. Now, about a month ago, you said, hey, there won't be anything in March, and we agreed. And you said there won't be anything in April, and I said, say it ain't so, Peggy. Come on, So now we're thinking summer.
Right.
Okay. So no change. That leaves prime rate at 7.2% today.
Right.
It's killing a lot of people. The other interesting thing is like a lot of the media is saying that, the government's just going to stop talking about it. Because if they talk about cuts, what happens?
They can't discuss cuts because when they talk about cuts, the bond market rallies down.
Yeah.
5-year fixed rates drop. The housing market, we still don't have the supply to service the buyers that are out there. So they're kind of euchred.
Things get hot, right?
This is why they don't talk about it.
Yeah.
They can't talk about it.
So there's headlines that say like, cuts will come in 2024. So
September.
Yeah. So I was thinking summer. Okay.
A lot of people are thinking summer.
You're thinking September.
I don't think they'll happen this summer.
Yeah. So let's talk about why that's important. Okay. When we talk about the overall cuts, we're talking about 1 to 2%. Let's call it 1.5% for this purpose. Okay. The longer the first cut is delayed, the less of those cuts we will see in 2024.
Correct.
Right. So if Peggy's correct and the first cut isn't until the fall, we're not going to see 1.5% of a decrease in 2024. It's just impossible.
Nope.
Because you won't see 0.5%, 0.5%, 0.5% with the 3 remaining meetings, for example. When the cuts come, they'll be gradual. Do you agree?
They will, absolutely.
The first one for sure is going to be quarter point.
But the thing is they have to test the market, right?
Yeah.
So they're gonna put out a quarter point and they may not do anything again for the next round because again, data dependent. They have to see how the economy responds to it.
Yeah. Yeah, totally. So, if that first cut is again delayed to September, one cut. A lot of people think it's going to be cut. But if it's not, then we get cut 25 basis points, no cut, and then another 25 basis points.
Maybe.
That's only 0.5. So that leaves 1% of that cut that we were talking about overall now falling into 2025.
Yep.
Being prolonged and delayed into 2025.
They, in all fairness, I think the Bank of Canada screwed this up real hard by leaving the rates as long as they did, low as they did for as long as they did. They cannot afford to have pie on their face again. And it isn't even just that. The problem is reining this back in.
Yeah.
Like you got somebody and he's down, like try reining that back in. You give them a chance to get back up. Like they can't rein this in as quickly as they can just holding. And by holding, we're not in a bad spot right now.
Yeah.
We're really not.
Yeah. Well, it's interesting, right? Because there's so many different facets to discuss when we talk about rate cuts, holds, and where things are right now. There's the people that are waiting on the sidelines, pent-up demand.
Yep.
There's the people that have 2% interest rates, and we talked about this right before we started recording. These people with 2% interest rates that can hold on are still accruing consumer debt. That consumer debt is still accruing every single day.
Yeah.
So, when we talk about the renewal wave that's coming, all the 1% and 2% that are coming up for renewal, what we're really talking about is a refinance wave because they're going to consolidate all that debt together. They're just waiting as well. So we have those people. We have the people as well that have the 2% interest rates that don't want to sell their house yet and move because maybe they can't port. Maybe they can't take that mortgage with them. So all of, those different facets, we have to keep those in mind when we talk about rate cuts because it all means more activity ultimately to the housing market one way or another.
That's the problem.
That is the problem because we don't have enough
inventory.
Period.
Nope.
period.
And they know that. The
Yeah.
Bank of Canada knows that. And they can't be solely responsible for the mess that was created.
Yeah, just recently, Tiff said, we can't solve the housing shortage issue
Correct.
through monetary policy, through interest rates, right?
Because that's what they've kind of been trying to do that. They've tried to give the government enough room to maybe start building some stuff and getting ahead of this, but they're not getting ahead of it. And that's the problem.
Yeah, and it's interesting, right? Like a lot of people agree with that comment and said, the reason they increased interest rates was so that people stop buying homes.
Stop buying.
Right. It's a different reason. You see, the Bank of Canada's sole mandate, like we've talked about before, is to control inflation.
Correct.
Now, one of the contributors to inflation was the housing market. It was also the rental market. It was purchase of all things, really. So they increase rates. They decrease inflation. Inflation comes back into line. They decrease rates. Let's say that's coming, right? When rates go down, people who are waiting on the sidelines likely will buy.
Get excited.
People that have 2% interest rates that have been waiting, okay, the market's going to normalize, or they're uncomfortable with the market, there's no confidence, maybe they buy. And at the end of the day, the housing market gets hotter. And that's why the Bank of Canada, that's why TIF is now saying, hey, wait. Just so we're all clear, once these rates start going down, that housing storm that's going to start is not our problem.
And really, all they've done is trying to put the storm off. And that's why I've been so confident that they won't cut.
Yeah.
And all my confidence comes from the housing market,
Yeah.
because I know that's our biggest problem in this country. And they can't control it. They try to buy some time. And that's why I've been so sure that they won't do this.
I agree. So when we talk about prime rate, when we talk about Bank of Canada, let's just do a recap for those that may not know. Okay. Because this is super important. Like you and I watch this every day. Too much.
Before I brush my teeth, I check the bond market.
We're texting back and forth all day. What do you think of this? What do you think of that? There's people that don't do that.
Right.
So to put things in perspective, prime rate is currently 7.2%.
Right.
Prime rate controls a few things: home equity lines of credit, variable interest rate mortgages, adjustable interest rate mortgages, and maybe some loans like car loans and stuff that are variable. But those are the three main factors. Now, that prime rate being at 7.2% means that home equity lines of credit are at 8%. Some are a little below, some are a little above, but they're at 8%. It's expensive.
That's huge.
Huge. If people borrowed money for renovations, if they, borrowed their down payment for an investment property, if they borrowed their down payment for a cottage, if they bought something outright, let's say you bought a condo at Friday Harbor and your house was free and clear. You just borrow it on your home equity line of credit. You go and buy the condo. Well, that cost has soared like crazy.
And that's why you're finding a lot of landlords, small landlords, they own one or two properties, maybe one property, and that down payment came from their line of credit.
They're cash negative now.
And that line of credit has shot right up. So now they find themselves where they're having to put more and more money in every month to keep this thing going because they can't raise the rents.
No, they can't. They can't. We'll get to that. So home equity lines of credit, variable interest rates, adjustable rates. So everybody's waiting for these cuts to come. When these cuts come, they'll be 1.5%, let's say in totality, right? Your prime rate of 7.2 gives you a variable rate of less than that. See, variable and adjustable rates, as we know, are usually less. They're like 1% less, let's say. So you're 6.2. The little known secret among most people who are waiting on the sidelines is that the rate cuts are already here. This is why you don't have to wait for the rate cuts. Fixed interest rates are driven by bond yields. Peggy's favorite thing right now, right? Study them, know them, learn them. 5-year fixed rates for first-time homebuyers, currently 4.99%.
It's pretty great, considering in October when they tapped out, some were 6.5, some were 6.35, 6.5.
Call it 6 to 5,
Yep.
For sure.
Yep.
For sure. 1 full percent less. So, compare that variable rate that everyone's like, let's wait to see what the Bank of Canada does. They're at 6.2, 6.3%. You wait, you get 1.5% off. You can virtually get that right now in a fixed rate.
Yeah, you can.
But you know what you can't get once the rates go down, once the Bank of Canada cuts rates?
Yep.
A good price on a
House
house.
prices.
Yeah, that's right.
Because they're not staying down.
Right. So once the cat's out of the bag, once the Bank of Canada starts cutting rates, everybody's talking about it. It's in the media.
Yep.
Confidence returns to the market. The housing market heats up. People buy homes. When demand increases and supply does not increase, house prices go up.
Do.
Right.
And that's why we found such a sweet spot in December and January when the rates were at 5%, but the house prices hadn't caught up yet because we had all that inventory sitting from the fall.
Totally.
Not so much the case. We still have a lot of inventory sitting, but it's in the higher priced stuff. Like you have a townhouse, you're pretty much guaranteed you can sell your townhouse.
Yeah. Okay. So 2 questions then. I get so excited when I start asking you these questions about the market
because he has a townhouse and he wants to sell.
Yeah, I have a townhouse that I'd like to sell one day too, for sure. Okay, so the first question is this: when that started happening, that sweet spot, interest rates go down, home prices are still low. What sells first? My guess is houses with the highest number of days on market, the ones that have just been sitting, and the good stuff.
Yep.
Are those the 2 categories that sell first?
And the low price stuff.
And the low price stuff.
Because when the rates go down to 5% and less,
yeah,
first time buyers can finally start seeing some relief. Maybe they can qualify to get in.
Yeah, so there was a 1-bedroom condo in Timberwalk, just down the road from one of our South Barrie offices and down the road from your office as well. And I, when I would drive to that office a few times a week, I'd think to myself, how many days in this market until that place sells? Because that $369,000, remember we did the math on it. I called Peggy and said, is it affordable now? It was $2,500 a month. That's
affordable.
Yeah. Mortgage, condo fees, and property taxes with a minimum down payment, $2,500 a month. It's reasonable.
Well, you can't really rent anything for less.
Yeah, I mean, you might be able to get a 1-bedroom condo for slightly less, but you won't get ownership. You don't get appreciation. You don't get principal pay down.
You don't get in the market.
You don't get in the market. So when the market really starts to pick up and appreciation takes off, you won't benefit from those sort of things either, right? So, sitting here, March 2024, tell me about the housing market currently, because rates are at 5% now, like for first-time home buyers. They started in January, February. Nobody really believed that they were going to stay. They're staying now. They're actually trending down a little bit right now.
They have, because last time we met, they were at maybe 525.
Yeah. Yeah.
But now you're comfortable saying 499.
499. Remember I said to you, I'm like, the first bank moved to 499. Don't tell anybody.
Yeah.
Oh, it's a secret rate. But now, I just got an email from Manulife Bank, 4.99% right before we started this, for example. Almost every bank is going to be at 4.99 by the end of this week, I would think.
Right.
Published, which means
you
one other bank.
You can get less.
Yeah, because one other bank is going to want market share. Yeah. They're going to say, if everybody else is at 4.99,
I'm at 489.
Yeah, 479, whatever it is, So those rates are coming down. The Bank of Canada is not coming down yet, as we know. So tell me what that means for house prices right now. Like, we were looking at townhouses as an example. So tell me, kind of what's happening out there.
So again, real estate is all supply and demand.
Yeah.
And right now, we don't have a ton of supply. We do have more demand coming in. So prices are on the way up. Yeah. They have already come up. You can already see it in the townhouse sector.
Yeah.
And it will bleed through to the rest of the market. But, you need one set of buyers to move before the next set of buyers can go.
Right. Good point. So I was saying to Peggy right before this, tell me about the townhouse market, because the townhouse market is like a great thermometer.
It is.
The condo market goes up and down and that sort of thing. It can be stagnant at sometimes. It's probably still stagnant right now a little bit.
The townhouse market is everything to this market. Like, make no mistake about it, because we need all those townhouses to move before we can get the middle of the road houses to move, before we can get the higher priced homes to move. Those townhouses are crucial. And so are the first time buyers, because that's what we lost and that's what stalled out our market.
I mean, so we looked at the townhouse market. When a townhouse sells, that person generally moves up to an entry level detached or something like that. Yeah, okay. I like it. So we looked at the townhouse market. There was one townhouse as of today when we sit here that was under $600,000.
And that wasn't the case a couple of months ago.
And it's funny, actually, there was 2. And Peggy clicked past it. And I said, wait, that one's $550. And she said it's sold. And I said, how do you know? And she said, because it's our listing.
Right.
So it was under 600,000, multiple offers sold for over 600,000.
Correct.
Yeah. So that still happens on well-priced homes, I'm sure, right?
Yep.
So that leaves one townhouse
Under 600,000.
under 600,000. Now that townhouse under 600,000, we were looking it up. We know the listing agent. We were talking about the area. Busier street.
Yep.
6 bedrooms by the college. Probably a good investment for somebody. Probably not a great family home.
No.
You know?
And I bet you money that by the next time we meet, there'll be no townhouses under 600. They may not be any under 650. Because that's what we're seeing. We're seeing an upswing in prices already.
And it's, you know, so as we were chatting about the townhouse, there was a few of us in the room, and one of your colleagues had said, you know, those same townhouses in the south end, these new ones, right, in the south end of Barrie, they're everywhere right now. They were like mid sixes. They're touching 7 now. They used to be 850, 900,000. Like, it's crazy.
But that again was when our market stalled out. When you saw townhouses go to 850, guess what? I'm not driving an hour up to 400 to get to
for work.
to get to home from work.
Yeah.
I'll live somewhere else.
Yeah.
So there is a cap on our market, and that's not going to change until we have a lot more industry here where people aren't traveling to Toronto. So there is a cap to this market.
Yeah.
This is not Milton. We are not Oakville. We are not Toronto. So there is a cap to this market. So will we see that cap again? Probably. It's going to take time though, because there is a segment of the market that I don't believe is coming back, and I've told you that.
Okay, so let's shift to that segment of the market in a moment. What I wanted to mention is I agree with you on that. Wholeheartedly. And what scares me is that 600 and change townhouse with a minimum down payment for a first-time home buyer is still $4,000 a month.
And that's our problem.
And it could be more.
Yep.
It could be more. If it has maintenance fees, like a shared common element fee, if it's in the south end of Barrie and it has higher property taxes, for example, or there's some townhouses, for example, down around that like Hearst Drive area that's, you know, has proximity to the water.
Yep.
Their taxes are higher. Like, you could be $4,500 a month for a townhouse. And that's, you know, it's a lot.
It's not doable.
It's not doable. So if that 650 goes to 750, it's totally not doable, right?
Not at these rates.
Not at these rates. Now, you know, are rates going to go down by fixed rates by 1.5%? No. Variable rates will go down by 1.5%. We're just not sure where fixed rates
already did.
Yes.
And that's the thing. That's the one equation that people aren't factoring in. We already went down because last October, around my birthday, I'll never forget it. You could not get a 5-year fixed for less than 6.35, 6.45.
Yeah.
So now we're talking 4.89, 4.99.
Yeah. Yeah.
So,
and I remember it because here I am dancing into your, you know, your monthly sales meeting with like your whole team. And I'm like, but look, you know, here's the rates, guys.
Yep.
And everyone's like, who's going to borrow at those rates?
No.
People that are forced to, or if you find a really great deal on a home.
Yeah.
But then you take a short-term fixed rate and, you know, as we talked about, you date the rate, marry the house, wait to renew, sort of thing. So, okay, so let's shift gears to that next segment. A few videos ago, we talked about the fact that in the previous 6 months, there have been 2 houses in the city of Barrie that had sold for over 1.5 million.
Right.
What about now?
Well, I mean, you're starting...
Not exact stats, but like that category.
You're starting to see movement in the higher priced homes, but it's going to take a while.
Yeah.
And again, when January and February 2022, a house that was 1.2 is now 900.
Yeah.
It's not 1.2 yet. And I don't know that it'll ever be 1.2 because the problem is we probably aren't going to get that investor segment back into this market, not for a while, because they have been crushed.
Yeah.
And until landlord and tenant get their act together, and it doesn't take a year to get a tenant that doesn't pay you a cent out, then we're not going to see that wave. And that's what happened to us. What happened to us in January and February of 2022, we had the lowest possible mortgage rates. First time buyers could buy $1 million home and carry
Yeah.
for nothing.
Yeah.
The investors were all in. Everybody was all in.
You could I love investing in real estate. So do you.
So do I.
You could buy a townhouse, say in Aurelia, for $550,000, put 20% down, rent it out at market rates, have a lineup of tenants, and cash flow after paying all expenses to $400 or $500 a month.
Correct. Yeah, you can't do that
You
anymore.
cannot do that.
No.
If you're lucky, you'll buy the same townhouse for, similar money, you'll get an interest rate with a premium because rental properties do have a premium.
Yep.
That rate will be 6%, 5.5%, let's say. And it could take you some time to find a tenant right now.
Yeah.
For sure.
Yeah. There's a lot of choice out there right now.
There's a lot of choice. And you will lose $500 to $1,000 a month.
Yep.
For sure. Without even doing the math, I can tell you that. You will lose. So why are you buying?
You're not. And
Speculation.
And that's the whole point.
Yeah.
And that's why I don't think the investors are swarming back into this market, which is great actually, because it gives us a little bit more time. Again, we're just buying time.
Yeah.
Everything that has happened during this entire cycle is just buying us some time.
Yeah.
Buying us some time to have the builders start building, because that's another problem that happened.
Yeah.
When you look at the States, it's a whole different area down there.
Yeah.
So the builders were buying down people's mortgage rates in order to keep that machine going.
Yeah.
They weren't doing that here.
They weren't doing that here,
no. No, the developers put their hands in their pocket and said, I'm stopped building until these rates come down. So that is a big problem as well. So when these rates start coming back down, yes, the developers will get back in this market. They'll start building again. That can't happen soon enough.
But it's going to take time.
It will take time.
It's going to take time. Because the other thing that we've talked about before is that when interest rates went up, cost of carrying developments for builders went through the roof.
Because they don't get special rates.
And
they pay top dollar.
They pay top dollar. Prime plus 2. Prime plus 2 today is touching 10%.
Yep. And nobody's building. Nobody's
10%.
building. And then during, that whole COVID period where everything was so damn expensive.
Building materials, labor, and everything else.
So this is how we ended up here.
Yeah.
But we're here. Make no mistake about it. We have a housing shortage.
Yeah. So Peggy, tell me, what is the best house to buy categorically? What segment of the market right now would you tell people to buy in right now?
So if I were a first-time buyer, we did a reel about this earlier. If I were a first-time buyer, I would probably find a home that had a tenant in it and buy that and maybe not expect to close when they say. Maybe it won't close on closing day. Maybe it'll take you 6 months longer. But those are the ones you're going to get a deal on.
Dates.
You're going to get a deal on. Even condos right now, because there's such a big supply, you're going to get a better price than a detached, say in Barrie. Detached homes, like a townhome in Barrie, there's not a lot of them. You're going to pay top dollar for it. There's that many people looking for it. So
interesting.
That's the segment that I would probably go after. And again, it's all supply and demand. Real estate has always been supply and demand. So right now we have tenanted properties that nobody will come near. We have condos. We have enough condos that you can negotiate.
Yeah.
But when it comes to the rest of it, not yet.
It's still selling.
Yeah.